Hello and welcome to another daily market update by Market Intel. We are on the Market Intel website, and if you're interested in daily free Elliott-Wave updates about stocks, cryptocurrencies, the S&P 500, the Nasdaq, gold or oil, then check out the link in the description. Follow the link to dailymarketupdate.com. Register for free and then you get daily updates. Let's take a look at Chevron today, which is one of the stocks in our US Titans package. So Chevron is one that might be worth watching in the next few weeks, possibly months, because we currently see the price in the end of a larger correction, completing potentially a correction that started a while ago. And after that, we could see the price get back into a more sustainable and substantial uptrend. And obviously, we try to make you aware before things happen and before things get exciting. So you can put it on your watch list or just sign up on dailymarketupdate.com for the regular updates. And then you can just follow our updates and you will not miss an update about Chevron anymore. So when you then register, you can obviously click on the US Titans. You get here your daily updates. We select Chevron and you get the written update here, together with all the relevant support levels and also relevant resistance levels. We also always mention which stocks are going to be published next. We should start on the long-term chart. Let's take a look at the 2-day chart. You can hide the text here. And what you can see is the price action since the autumn, September 2022. You can see here that a larger fifth wave is likely unfolding, highlighted here in magenta. And this started sort of middle, end of 2023, more in the middle of 2023, this fifth wave. And it is likely, that's how it looks like, that an ending diagonal pattern is unfolding. That could take us to $200 and beyond medium term, long term, we should say. And there is a critical support level at $132.54 that in our primary scenario, we do not expect to be broken. We give the alternative scenario a 42% probability at the moment. So probabilities are fairly balanced, but we are already very close to that support level. So that is always quite interesting in terms of finding a potential entry point. The closer to an invalidation point, the lower the risk, because the stop can be set very, very tight. However, let's take a look at the structure. So the magenta wave 5 should unfold as a 5-wave pattern. It's currently seen as a potential ending diagonal because the wave 1 is a very clear 3-wave move. And the context that we get from Elliott-Wave tells us that we are likely entering a 5th wave. Now, if in the 5th wave, wave 1 is a 3-wave move, it hints at a potential diagonal, because in an ending diagonal, these subwaves are corrective. So that means that also in a 3rd wave here, we should see a corrective rally, but there should be a rally if this primary scenario is being followed. Very important is to consider that there is no confirmed low in place yet in this wave 2. So we can take a look at that on the smaller time frame now. But as long as we are still on the 2-day chart, please also take note of the very relevant resistance level here, the wave 1 high at $189.68. That, of course, will need to be broken in the process of a 3rd wave to the upside in this diagonal within wave 5. So let's take a look at the 2-hour chart. On the 2-hour chart, we can see the detail here, and this wave 2 that I just mentioned is currently likely still unfolding. Within this wave 2, we are most likely in wave 5, so really in the last wave of this wave 2. The wave 2 is an ABC structure, and the C wave is a 5-wave move, highlighted here in magenta. And within the C wave, we have 5 waves. Wave 4 topped recently here around $155. That was in January, and wave 5 is likely unfolding. And in the primary scenario, here on the smaller time frame, which we give quite high probability, actually more than 70%, we should see that support level break at $140.72. So $140.72 is the critical support here. That should actually break in the primary scenario. And then somewhere below that level, just a marginally lower low would be okay. This wave 5 of C of 2 should finish. From here, we would then expect a more substantial uptrend that then also should take out medium term the $158.99 level. In the alternative scenario on the smaller time frame, this wave 2 is already completed here earlier at $140.72, but we only give that really 28% probability. In this scenario, it would turn around now. The price would really need to turn around now and rally and break above $158.99. But as I said, in the primary scenario, we see that only after breaking below $140.72. Then it's worth watching for a potential low in this region. So it might be something for the watch list. And yeah, that is the update about Chevron. So hope you like the update. And make sure that you follow the link to dailymarketupdate.com. Register, get the daily Elliott-Wave updates for free. Thank you very much. Bye-bye.